it's at least a ray of hope for the markets at this point. So there was a sharp rebound in China's PMI data this morning. It shows that businesses have got back to work fairly quickly, which is, probably good news in itself for the global supply chain for sure. The problem is right now is that Europe and the U.S., they are still well behind, and the bottom in growth is not visible yet from a global growth perspective.
Right. Jason, the market was expecting a bounce back in China. So the PMI numbers, as per what our Reuters poll was indicating, was reflecting a number of 45. So directionally, the market was working with the assumption that there will be a bounce back because production activities were resuming in the region, and labor was getting more active as well. But this much, like the extent of the outperformance going above the expansionary zone, isn't that a bit too much, too quickly in terms of a bounce back coming in for the region?
Not necessarily, because in China's case, they put in pretty strict measures as far as the lockdown when the virus was a big problem there. And they relaxed those rules, and, their goal was to get businesses back online as quickly as possible. So, the business side coming back fairly quickly probably shouldn't be surprising, given the way that China's able to move resources forward. I think the big question now is going to be what happens on the consumption side in China. Are people that, now are able to have free movement going to be back out spending money like they were, or is discretionary spending going to be restrained for a longer period of time?
That's exactly right, Jason, and that's the big unknown at this point, exactly how that's going to be filtering into the data to come. Certainly a lot of uncertainty moving forward. I wanted to get your take on how to trade it, though. What's the best strategy to put in place here? We spoke to one guest over at UBS earlier today who said that now is the right time to go long CNY, long dollar yen versus USD to capitalize on this fragile mix, if you will, between yield and safety. What's the view over at SocGen? How do you trade it?
Well, from an EM currency perspective, I still like being long USD against EM. That's been the case for quite some time. So we still like buying the dollars on dips. The problem now is still that the economic contraction is growing in depth and duration, and there's still asymmetric downside risks to EM currencies. Central banks have done a lot, so restoring liquidity and having the proper functioning of markets is good. It's necessary, but probably not sufficient for the dollar to turn at this point.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.